Hello everyone, welcome to JAIIB CIB English Medium. My name is Aarti and I hope you all are doing good. As you know, this is your Manthan series and yesterday only we have completed our all modules, all units from your ABFM. Now today we are practicing few MCQs which are very important for you. So let's start today's session. But remember one thing, if you're preparing for CIB December 25, then you require your concepts must be clear. Yes, and for that you can join our paid batches. Along with that, you can take the help from this series as well. So do subscribe to our channel. Along with that, you can like this session so that in future if you want to practice numerical, you can watch this. So in today's session, I'm going to cover numerical as well as one case. So let's start today's session. So first question is based on your numerical part only. So a company has the following data like sales 11 lakhs, variable cost 5 lakhs, fixed operating cost 1 lakh 90, interest on debt 40,000. Now in this question you need to calculate three things. Yes, number one contribution, second EBIT and third EBT. Now this question is based on your that income statement. Yes, so let's start and let's form that in statement. So I'm writing solution this side. So first, you need to start always with your sales amount. Here, your sales amount is equal to 11 lakhs. Whatever revenue you are generating, from that revenue, you are going to subtract variable cost. That is 5 lakhs. Yes, from this, you will get the difference of 6 lakh and this is going to be what? This is your contribution. Now see, in question, they are giving data in total terms. So we are going to assume this answer also in total, correct? Now from this contribution you are going to subtract fixed cost. Yes, see, fixed means, for example, you can say rent payment, insurance payment, yes, salary paid to admin department. So all these are examples of your fixed cost, whether you do the production or not, this cost will incur. Whereas if I talk about variable cost, these are the costs which will fluctuate as you produce. Yes, directly you can say raw material. Raw materials are directly linked with your variable cost. Yes, so here fixed cost, fixed operating cost, that is given, that is 1,90,000. As soon as you subtract 1,90,000, you can say 6 lakh minus 1,90,000. This is your 4,10,000. Yes, 4,10,000 is your EBIT. See, EBIT means what? Earning before interest and tax amount. Yes, so this is the earning you are getting before interest payment and tax payment. You pay tax to government authorities and you pay interest on borrowed amount. Yes, or you can say here debt amount. Yes, borrowed amount or debt amount. So this is the earning before paying your debt amount, before paying your tax amount. So this is the earning. Now from this earning, as soon as you subtract interest, because already in your question it is given interest on debt. Yes, debt means your borrowed amount, so that interest is equal to 40,000. So 4,10,000 minus 40,000, this is your 3,70,000, and this 3,70,000 is your EBT. This EBT means earning before tax. Okay, so here you can say answer A is your, let me write over here, answer A, contribution equal to 6 lakhs. Then B, EBIT equal to 4,10,000. C, EBT equal to, that is 3,70,000. Yes, so these are the answers. And remember, this statement is very important when you are preparing your leverage. Yes, when you are solving capital investment decisions, or when you are doing your next module, that is module C. So this statement is universal statement, you can say. For every numerical question, you require this statement. Yes, so this is your first question. Now let's solve the second one. So if the sales of a firm increases by, yes, 12%. Now what they are saying, if your firm sale sales amount increases by 12% and its DOL, its DOL is equal to 3. So what will be the percentage change in EBIT? So in this question, what they want to calculate, they want to calculate percentage change in EBIT, and what they are given, DOL 3 and increase in sales 12%. Now DOL means degree of operating leverage. Yes, so here if you see the formula for DOL, that is percentage change in EBIT divided by percentage change in your sales. This is a formula you need to apply when you're calculating degree of operating leverage. You have two formulas. You have one more formula, that is contribution divided by EBIT. Okay, but in this question they have given the data for percentage change in EBIT and percentage change in sales. So that's why we are using this formula. Now remember one thing, here this sign denotes your percentage, yes, and change. Yes, most of the time when you see a book, your IABF book, or you see any notes or anywhere, if you see triangle, okay, in that formula, that triangle denotes change. Yes, change, correct. So here you can see already DOL they are giving as 3. We need to calculate percentage change in EBIT. This is the symbol for percentage. This triangle is the symbol for change. Yes, divided by percentage change in sales. Already it is given as 12%. Yes or no? 12%. Now just do the cross multiplication and you can calculate directly percentage change in EBIT. So can you tell me what is the answer here? Your percentage change is going to be 36%. This is your answer. Correct? This is how you need to calculate your DOL when they're asking about percentage change in your EBIT divided by percentage change in your sales. Here we are making a relationship between your sales and your EBIT. Means if your sale amount changes, so how much change you can see in your EBIT. Correct? So this is what we are going to denote from this. So this is a second numerical question. Now, okay, so we have one theory question here. So as per this, if a company issues debentures are your debt amount. Yes, these are your debt amount. So if a company issues debentures to more than 500%, what is required as per regulatory norms? Yes, so here you need to tell, if you are issuing debentures for more than 500 people, then what is the requirement as per regulatory norm? A. Appointment of a statutory auditor. B. Appointment of independent directors. C. Appointment of debenture trustees. D. Approval from registrar of companies. So here, whenever you see in your debenture, suppose this is a Reliance Industry, for example, I am giving here. In Reliance Industry, they have issued debentures, okay, for suppose 700 debenture holders. Correct? So in this case, they are going to appoint as this crosses 500. Yes, as this crosses 700 is greater than 500, means here you are going to appoint debenture trustee. Here you are going to appoint debenture trustee. So your correct answer is answer C. This one is your direct question based on that regulatory norm. Yes. Now let's solve a case, because as you know, in your CIB you have case studies. Yes, you have MCQs, you have without option questions, you have numerical questions. So first question, this one we have seen. Even the second one we have seen based on without option question. Okay, then we have seen MCQ pattern. Now let's see case pattern. Correct? So let's read. Vignesh Limited, a public limited company, issued redeemable preference shares, that is RPS, worth 50 crore in the year 2010 with a redemption term of 20 years. Okay, the company has regularly paid dividends until 2022. Here we have Vignesh Limited. Okay, they have issued preference shares, and as you know, in India you cannot issue irredeemable shares, है ना? But redeemable shares you can issue. Now, redeemable shares means there is going to be some specific life, correct? So here you can see till 2022 this Vignesh Limited used to pay continuous dividend on a regular basis. But due to financial challenges, it failed to pay dividends in 23 and 24. You can see because of some financial challenges, this Vignesh Limited was not able to pay, on 23 and 24, this dividend amount. Now, the management now plans to redeem the shares in 2030. Okay. Now this time, 2030, they are planning to redeem it by issuing fresh equity shares to meet the redemption amount. Okay. Additionally, Vignesh Limited is considering a new infrastructure project for which it plans to issue a fresh batch of preference shares with a maturity of 25 years. Yes. So Vignesh issued first a redeemable preference shares. Second paragraph, if you read, here again they are issuing, but for some other project. Okay, so now if I discuss about redeemable preference shares, if I talk about redeemable preference shares, so what are the qualities we have under this? Under redeemable, you are going to prescribe life for all companies. You know what is the maximum life? That is 20 years. Correct? For all companies. What is the maximum life? That is 20 years. But now when we are talking about this infrastructure project company, here you can issue for max 30 years. Yes, more 10 years you can issue. But additional compliance you need to do that from 21st year you need to redeem. You means that company need to redeem at least 10% of preference shares. Okay, from 21st year, this company needs to redeem, the 10% of that preference shares. So that is the compliance that infrastructure project company needs to follow. Okay, so we have seen in this first paragraph, they're talking about normal project. But in the second paragraph, they're talking about infrastructure project. Yes, so now let's solve the questions based on this case. First one, according to the Companies Act 2013, what is the maximum redemption period for standard redeemable preference shares? A, B, C, D. Normally, when you are issuing redeemable preference shares, so what is the timeline? And just now we have seen, yes, just now we have seen that max for 20 years. So here your correct answer is equal to answer C. Now, coming to next, can Vignesh Limited, being an infrastructure company, issue preference shares with a redemption period of 25 years? Tell me, what do you think? Now when Vignesh is planning to work towards this infrastructure company, so now can they issue for 25 years? Answer option A, yes, it can issue RPS for up to 30 years. B, no, it must redeem within 20 years. C, only with SEBI approval. D, only if dividends are not declared. So what do you think? Yes, the correct answer is answer A. Yes, because now you are infrastructure company, you are doing infrastructure project. So you can issue up to, up to 30 years. So 25 years is less than 30 years, so you can do it. Okay. Coming to next question now. So for this, your answer is equal to A. Yes. Now, coming to next question. Since Vignesh Limited did not pay dividends for 2 consecutive years, what additional right do preference shareholders get? If I talk about preference shareholder feature, yes, so they receive fixed dividend plus at the time of redemption, or at the time of winding up, at the time of wind up, they get preference, first preference over equity. But generally you see they are not receiving no right to vote. Yes, so these are the basic features. But this no right to vote, this changes when your company, that company does not pay for 2 consecutive years any dividend. Yes, for 2 consecutive years means continuously, if that company, yes, did not pay any this dividend for 2 consecutive year, then here you will give right to preference shareholder to vote. Yes, now they will also become, the part of voting. So now let's read the options. A, right to appoint directors. B, right to vote on all company resolutions. C, right to claim interest. D, right to convert shares into equity. Tell me. So now what do you think? When we are talking about when you, this Vignesh Limited did not pay any dividends for 2 consecutive years, they're not receiving right to appoint directors. Right to claim interest? No. Right to convert shares into equity? Answer is no. Correct answer is right to vote on all companies' resolution. So here your correct answer is answer B. Yes. Now, so here we complete your one more case. So see, in exam they can ask a case-based question on your theory part as well as on your numerical part. Yes, and we always see numericals in your module B. So this question was based on your module B. Correct? Chaliye. Now coming to next question. A company has sales 16 lakh, variable cost 8 lakh, fixed cost 3 lakhs. Now what is the degree of operating leverage? Here you need to calculate degree of operating leverage. And what is the formula we are going to use here? We are going to use contribution divided by EBIT. This is the formula we are going to use. Correct? So again, you need to make that statement. Start with sales, that is 16 lakhs minus variable cost 8 lakhs. So what contribution you can see here? Contribution is equal to 16 minus 8, that is your again 8 lakhs, minus fixed cost, that is 3 lakhs. So your EBIT is equal to 5 lakhs. Correct? We require these two things, contribution and EBIT. So here your contribution is equal to 8 lakhs. EBIT is equal to 5 lakhs. So 8 lakhs divided by 5 lakhs, so your DOL is 1.6, and this is your answer. See, in your this June 25, they have asked questions based on this DOL, DFL combined. So this unit is very important, especially this leverage unit. Yes, you cannot skip this leverage unit, and they are asking direct questions based on this leverage. Yes, so this is one more question based on your leverage. Now, next question. A company has EBIT 7 lakhs, interest on debentures 90,000. You need to calculate degree of financial leverage. What do you need to calculate here? Degree of financial leverage. So here your DFL equal to EBIT divided by EBT. Yes, earning, EBIT means earning before interest and tax divided by earning before tax. Correct? So here we have EBIT, that is 7 lakhs minus interest 90,000. So here your EBT is going to be 7 lakhs minus 90,000, that is 6,10,000. So here EBIT 7 lakhs divided by EBT that is 90,000. So what is your answer? 7 lakhs divided, I'm so sorry, this is not 90, this is 6,10,000. Yes, so 7 lakh divided by 6,10,000. So your DFL is going to be 1.147, and this is your answer for DFL. In today's session, we have seen different pattern which you can see in your exam. So remember, right now we are about to end with August month, yes, and at this moment you need to start practicing. And this is the perfect way through which you can do your daily practice. See, as a banker, we know that you don't have that much time. But for clearing your CIB, you require more and more practice. That's why here our team always tries to bring, more practice sessions. Yesterday, we just completed our concept plus important concept plus MCQ series. And this is again one of the way through which you can do your practice. So make sure you are subscribing to our channel. You are watching these sessions. Do watch all the sessions in 1.25 speed or 1.5 speed. But make sure you are making the targets. Correct? So with this, I complete today's this session. But remember, if you want to join my Telegram group, you can scan this QR code. And for batches, you can use Y895. This is the coupon code which you can use for the maximum discount. And apart from this, if you have any further query, you can use this comment section as well as this QR code. So with this, now I'm winding up this session. So thank you everyone for joining. Take care and bye-bye.